Hello guys, welcome back to my channel. In today's video, I'm going to announce the start of a new lecture series on stock market. When I was 18 or when I just turned 18, I was having this very strong will to make money. And so I checked for many income options and I found investing was a very good option. But where to invest? And then I searched and found out stock market is a very good platform to invest your money. So I decided I should start a platform. I should start trading very soon, and so I made an account and I just took the app which they provide and started trading. But slowly, I understood one thing: nobody can just go and start anything like that. You have to understand many things, many basic things, many terms, and many strategies, and like how to read some charts and how to predict the outcome of your actions, etc. So those were the things which I lacked at that point of time. So I took a break from stock market and I started studying more deeply about stock market. I didn't go to the high end learnings, but to the very basic, because that was what I was lacking. So through my videos, what I am telling my friends is that if you're going to stock market, if you're going to invest in stock market, make sure you learn from the very basic things, many terms, many charts, and many other things. So in the first video, I'll be showing you, or my first lesson is about the importance of investing. So if you're new to my channel, please make sure you subscribe, and if you like my video, please like and share it with your friends who are about to start in the stock market or who have just started in the stock market, because I am pretty sure they lack some basic knowledge which I am going to share with you. So let's get into the video. First lesson is on importance of investing. Keep watching. Thank you.
Hello friends, I welcome you all to the first day of stock market series. First lesson is importance of investing. Your hard-earned money is what you're going to invest, and by the time of retirement, you can get a good sum through returns or dividends. To see the importance of investing, first let's take a condition where you decide not to invest. Suppose you earn 50,000 per month right now and your expenses are 30,000 per month and you can save up to rupees 20,000 each month. For the sake of calculation, let's take some conditions. You get a 10% salary hike every year. The cost of living increases by 8% every year due to inflation and some other factors. You are 30 years old now and you plan to work for 20 more years and retire by the age of 50. 20k is what you're saving and it goes to your savings account. Take a look at the chart now. In the first year, your income is 6 lakh rupees and your expenses are 3 lakh 60,000. So the cash retained becomes 2 lakh 40,000. In the second year, after getting a 10% salary hike, it becomes 6 lakh 60,000 and your expenses become 3 lakh 88,800 rupees. So the cash you save becomes 2,71,200 rupees. So going on like this, by the end of 20 years, your total savings become 1 crore 78 lakh 90,693 rupees. So from this example, we can see that without investing with a 10% salary hike, by the end of 20 years, you will save almost 1.7 crore rupees. But there are some problems. You didn't change anything in your lifestyle. Nothing was possible. No vacations, no entertainments, no enjoyment. And also after retirement, with this 1.7 crores, you can maximum last for 8 years. Now let's find out what happens if you decide to invest in a platform with 12% annual interest rate. Let's take a look at the chart now. In the first year, your savings are 2,40,000, and if you invest this money at the rate of 12% interest, by the end of 20 years it will become 20,67,000 63 rupees. In the second year, you can save 2,71,200 rupees. If you invest the same at 12% annual interest rate, by the end of 20 years, it becomes 20,85,519 rupees, and so on. So by the end of 20 years, you will have almost 4 crore 26 lakh 95,771 rupees. That is almost 2.4 times the money if you had not invested. So that gives you three main reasons of why you should invest. The first one is to fight inflation, the growing cost of living. Second is to create wealth, better earnings by the end of a particular defined time period. And to meet your financial aspirations like to have a better home, a better car, etc. The next major question is where to invest. There are four main investment instruments. The first one is fixed income instruments. Second, equity. Third, real estate. And fourth, gold. The return is directly proportional to the risk you are about to take. And you should choose your assets according to your risk profile. Let's start with fixed income investments. For example, bank fixed deposits, bonds issued by Government of India, bonds issued by government agencies like HUDCO, NHAI, Indian Railways, NTPC, etc. Bonds issued by private companies like Mahindra Finance, Sriram Transport, etc. These fixed income instruments have a typical return of 7 to 10% per annum. Second one is equity investments, that is, buying shares of publicly listed companies from stock exchanges. India's two main stock exchanges are BSE, the Bombay Stock Exchange, and NSE, National Stock Exchange. Around 14 to 15% CAGR, compound annual growth rate, has been achieved in the past 15 years. Some of the best run Indian companies has achieved more than 20% CAGR. Also, investments for long term, like more than a year, called LTCG, long term capital gain, has just 10% tax if the returns are above 1 lakh rupees. If it is under 1 lakh, there is no tax. This is an added advantage of investments. Third one is real estate, buying and selling of properties. Various properties like apartments, farmlands, commercial spaces, etc. Rental income and capital appreciation of property is an added source of income from real estate. Fourth one is investment in precious metals like gold and silver. These have generally made a return of 7 to 8% over the last 20 years. Investment in the form of jewelry or ETFs, that is, exchange traded funds, or government issued bonds, are possible. The main thing to remember about investment is that do not put all your eggs in one basket. That means you should not put all your savings into one stock or one source of income, etc. Your investment should have a mix of all asset classes. That is called as asset allocation. By asset allocation, experts say if you are a young person, you should have 70% of your savings into equity, 20% into FDs, and 10% into precious metals. And if you are old, you should have more capital protection. So 70% into FDs, 20% into equity, and 10% into metals.
So guys, I hope you understood the first video. If you have any doubts, leave it in the comments. If you like my video, give it a thumbs up and share it with your friends. Please make sure if you are new to my channel, do subscribe and press the bell icon so that you don't miss any updates. Thank you for watching. We will see you in the next lecture.